Welcome, everyone. My guest today is Kim Hoffman, President at Mortgage Connect Risk Solutions, to talk about the important role of technology in risk management. Kim has a long background in leadership roles at mortgage companies, including SoFi, Envoy Mortgage, Morgan Stanley, RBC Bank, and more. Let's dive in. Kim, welcome to the podcast.
Thank you, Sarah. It's awesome to be here with you.
We are so excited. So before we get started, I just wanted to take a second to congratulate you for being a 2024 Woman of Influence and to note that this is the third time that HousingWire has recognized you in this way, which is really rare. It shows your influence over multiple years in the industry, which, obviously you've served in leadership roles at a number of places, but it is still just such an honor to have you on here.
Well, thank you. Receiving that was quite a surprise to me. It's very humbling to have a career in such an amazing industry surrounded by so many amazing people, yourself included. So thank you.
Well, thank you. Okay, well, let's talk about risk management, right? I mean, I think risk management is more important than ever. We're finally seeing loan repurchase numbers trending downward. That's great. But, let me ask you, is that because due diligence is getting better?
I think it's a couple of things. From my seat, when we were going through the pandemic volume, I always felt like because of we had such stressed resources, right? And just amazing amounts of volume. I always thought that we would see at some point in the future higher repurchase demands, right? That would just be what you would expect. And so I hope that all that volume has now worked its way through the system. And then if that's worked its way through the system and now we have some volume contraction, I think we have lower, obviously originations, therefore you have lower repurchase demands. But during all of that, I think the amazing outcome, if there is a good outcome of repurchase demand, it's made everyone pay much more attention to due diligence, risk management, and understanding the issues that are inherent with manufacturing loans and how fragile manufacturing loans can be because it does yield a potential financial impact that's outside of your daily purview. And so I think everyone's gotten much better at that.
I think this is one of the things about our industry that it's not unique, like no other industry does this, but to the extent that it is like the look back, right? It's a long tail. It doesn't happen right away. And, to your point, we talked a lot when we were having those crazy refi years when things were just happening so fast. Like, how do you have quality control within that environment? It's just really difficult.
It is extremely difficult. But I mean, at the same time, I feel like quality control is part of the manufacturing. So, and I've been a lender and I just joined Mortgage Connect Risk Solutions in the past 6 months. But as a lender, quality control was always embedded in my manufacturing because I want to see where I'm making mistakes way ahead of anybody else seeing them so that I can cure them as fast as possible. And I do think that because of the repurchases, and I think the rep and warrant period is like 3 years. So you originate a loan and then you have 3 years of where you're waiting and wondering as to whether or not that loan is going to be put back to you. And I think we've all had loans where we've had a repurchase request or demand, and it was a performing loan, and it was a documentation issue, or it was an income calculation that actually might not have even been that material to the file. And yet you're either going to pay an indemnification fee or a repurchase fee. So either way, you're having a financial risk for 3 years on every loan that you manufacture. And therefore, due diligence, good quality control, and good process management is just key to how we manufacture our loans on a daily basis.
Well, let's talk about how Mortgage Connect Risk Solutions, how you guys are innovating when it comes to risk management.
Well, so first of all, I should say that Mortgage Connect Risk Solutions is a newly branded name of Advotech. And Advotech has been in the business for over 40 years and has been protecting clients from the risks inherent in manufacturing process by performing third-party pre-funding quality assurance and post-closing quality control on newly originated loans, and also doing other due diligence work on seasoned loans for those who are buying or selling loans in the industry. To date, we've performed over 1.5 million quality control reviews, something I never thought I would say in my lifetime. That is a lot of work. And we've reviewed over 300 million documents. We partner with over 300 clients, and we're approved by all 5 rating agencies. So we have quite the legacy in helping our clients mitigate risk. Like I said, I joined about 6 months ago as the president. A fun fact is that I actually was a client of Advotech, now Mortgage Connect Risk Solutions. So I knew a lot about the organization coming into it and was thrilled to be able to become a part of it. So what I'm really excited about and what I've been doing for the past 6 months is really looking at all of the outstanding curated applications that we have that help our clients see and mitigate risk from the work that we do. But now I'm really leaning into AI and what the capabilities are for AI. I'm not a technologist, but I'm certainly a technology enthusiast. And I have been for about 8 years since I saw the impact of robotic process automation. And then I saw Google's DeepMind, which everybody can go out and look at. And I think it's one of the most fascinating things. But Google's DeepMind is playing the grand champion of Go, which is a game with an infinite possibilities. Nobody thought the AI could win, and it did. And I thought right then and that being a technology enthusiast and an operations executive, understanding and embracing technology and how it can impact our worlds was key to how we manage our businesses. So I'm looking at how AI can empower and enhance our employees in the work that we do. And we're partnering with a consulting team who's helping me on that journey. So it's not just me doing research. It's really me understanding what the capabilities are, how it will impact the services that we provide. And one of the things that I'm looking at near term, like right now, is that I have almost 40 years worth of guidelines that I'm going to digitize and use AI to support our employees who are looking at seasoned loans, some that are before TRID. So wow. In order for us to do our due diligence work prudently, we're scanning, and going through pages of documentation and guidelines. AI can help us surface that very rapidly.
Boy, that is so much that you just said in that answer, because so we had Sandra Thompson come and speak at one of our events about a year ago, and I asked her specifically about these repurchases, which at the time were just like, kind of just escalating, and here we are in a low volume environment. Why are we picking on loans that are already performing, all that kind of stuff. She was great. She was very open to answering that. Part of her answer though was like, listen, there's technology out there to help people, to help these lenders get it right on the front end. So from her perspective, she wasn't completely sympathetic, because she was like, there are solutions and you should be, availing yourself of these solutions so that we don't have to come back and do it.
So she has a great point, and I completely agree with her. I think one of the challenges that we have, Sarah, in the industry is, the cost to originate is upwards of $14,000, I think is the last time I saw. And I also heard that only about 37, maybe 30% of the technology that's been deployed is actually optimized and used. So you have, the expense, and you have the, people who are using it, and not using it. And I think we have a tendency to always focus on the customer experience on the front end and really getting the loans through the process. And I think, and I hate to say this, but I do believe that the quality aspect is maybe a lagging component of what we're doing in operations versus embedding technology to manufacture defect-free loans. I mean, it would always be so much better to prevent it than it would be to fix it, right? And in my seat, I'm looking and using technology to help my clients not fix a file, but fix a process that yields the defect, right? A lot of us in operations, we're always, it feels like we're in a scramble, right? You have 21 days to manufacture a loan that has almost 350 pages and 2,500 data fields inside of an LOS. That is a lot of burden for an individual or for multiple individuals. And then, of course, with the multiple individuals, you have all these passes that are happening between them. Things are going to get missed. So if you're not investing in good technology to underpin your operations, and now I'm speaking as an operator and a risk mitigator, that is a lot of burden for individuals. And then you add in the piece where we're always scaling up or contracting down. Keeping steady knowledge for our employees is also incredibly hard. And technology can help with that as well.
So, you talked about AI, and we just had our AI summit, and then I went to the FHFA Tech Sprint, and then I went to CoreLogic's Core Connect, which had a real AI focus. Like, it is everywhere. Mm-hmm. Do you feel like you were sort of an early adopter in the sense of, or just an early enthusiast where you're like, you saw the possibility of what it could do?
I'm definitely an early enthusiast because I saw what robotic process automation could do. And so I have deployed robotic process automation, or RPAs, throughout my organizations for the past 8 years. AI, to me, is one of the most fascinating aspects of technology. I think it's funny because I heard this said that the most recent or the most excellent technology, or the best technology that was ever invented for the mortgage industry or deployed was 2 screens. So I think that we're still pretty far behind. I think it was Garth Graham who actually said that. It was Garth Graham who said that. And I laughed because, it was funny. And when you think about it, that really, we haven't really adopted a lot of technology that does a lot. But a lot of outsourced providers have done a lot with RPA. And I now think, from my seat, I'm always looking at ways to make our business run faster and smoother with, extraordinary accuracy. And that can't be done through humans. I mean, the seller guide for Fannie is like 1,100 pages. That is a lot of content for people to maintain in their heads, right? So I look at technology is what empowers and underpins our ability of our people to do the work we're asking them to do. And that is not just manufacture loans with quality, but also provide a great customer experience, a great loan officer experience. I mean, you think about operations, you have many constituents, and they're on the front end and they're on the back end. And in addition to all of those people are rated on the quality of their output and the speed of their output. So there's a lot of converging factors on our personnel that I believe technology can help remediate for them. And I've always believed that technology should be the spine of operations.
I love that. And, let's dig in a little bit there. What are the foundational principles your technology is built on?
So I have 3 that I stick to this. And that is accuracy first, transparency, because you have to know what it is we do. As a client, my job is to show you my work, right? Just like in school. And then productivity, because our clients need to see the results of our reviews as fast as they can so that they can remediate the process level issues. It's one thing to fix a file, but it's another to fix the process to prevent the defects. And so those are my 3 pillars. And I continually tell my team, it's got to have, it's accurate, it's transparent, it's got to be, make us productive, more productive.
I think that one of the last things you said about not just looking at what the problem is, but taking a step back and saying, why do we have this problem, right? Because you can deploy technology, you can throw technology at a problem and solve it, but if you haven't solved the underlying issue, you're just creating more work for people.
Well, you are, and I think everybody's good at fixing a file, right? But I mean, often fixing a file means you're going back to a customer, right? A consumer who's already closed a loan, and you're asking them to help you remediate an issue that happened in your manufacturing, right? And then if you don't solve the process problem, you're just manufacturing defects, right? And technology, to me, is the way to help you surface that the best. And in my case, performing this on behalf of clients, I want to make sure that what I surface comes back to you in a meaningful way it's non-biased, it's independent, data-driven, and you can make the changes, and we'll help you show where those areas are for improvement through our business insights back to the customer. Because it just doesn't make any sense to fix a file, especially if you're just fixing 1,000 files. Fix the problem and eliminate the fix on the 1,000 files.
I do a tech interview every week with different executives at different kinds of companies. And one of the things that somebody said to me that really stood out was he was like, a couple years ago, having a dashboard that just showed you all of this information at the right time in the right way so you can make decisions was like cutting edge. And he loved it and it was great. And he was like, today, he goes, why do we need a dashboard? I don't want to, I shouldn't even need to do that. Like, let's deploy AI or let's get people in the decision-making process so that, they don't even need that. And that was just such a new concept to me to think about, some of the things that we're so reliant on. That's like, this would be great. We surface this, we do this, but like, it's taking that step back and looking at the larger picture that I think is really going to make people more efficient. And that's my next question, which is like, how does effective risk management technology contribute to efficiency and cost management, which to your point earlier about how much it costs to manufacture a loan is just top of mind now. And even when rates go down, even when we have more volume.
So I think as long as, so lucky for me that the agencies require, a review, a pre-fund QA review and a post-close review. I do believe that there will be a time in the future where you will find more AI embedded in the LOS or in whatever systems that people are using. I believe, however, though, as much as that excites me, I do believe you'll see that pushed more to the front end first to help with the client or the consumer experience rather, right? And then you'll start seeing it migrate through the other areas of the manufacturing process. I'm a little surprised how slow we've been to adapt underwriting engines, right? I thought, when I started seeing those come out, I thought that's the greatest thing since two screens. Because, it's our most expensive resource, right? Who's doing that work. And wouldn't it be awesome if they didn't have to remember 1,100 plus pages of content, but had an engine? And I do have a business rules engine that helps me on my side of the business, but wouldn't it be awesome on the origination side if you had that technology helping to serve that up to the underwriter and identify the risks inherent in that file so that they could be remediated almost immediately? So I've been a little surprised that we've been so slow to adapt to that. But I also feel like our industry is always under the pressure of we're either, rapidly expanding up and we can't pick our heads up for anything other than just the volume coming through the door, or we're contracting down in profits and, revenue are contracted as well, making it difficult for us to invest in technology. But I was one of those people who thought, I guess, kind of like the electric car, that these decision engines were going to take off. That if nothing else in technology took off, these were going to take off. And there's a couple out there that I think are just amazing.
That's really interesting. I love that perspective because it is one of the reasons that like the FHFA, for instance, had the tech sprint. And there's an executive order that all of the agencies and all the government things, they have to have an AI office, right? A chief AI officer, which is, wild when you think about some of the modernization programs that they're still working on one end, and then they have to have this AI officer on the other. You're like, how does that work? So I think it's wild to think about the fact that there is so much technology that is currently available that's not being used or utilized in a way that does these things, cost efficiencies, cost management. And so, we can talk about AI and get excited about that. But to your point, it's like there are already some things out there that just aren't really being utilized.
There's compliance engines, there's decision engines. So I think that the capability to manufacture a defect loan, a defect-free loan are pretty much at hand. It's just whether or not people are using them. And I use those technologies in my world as well, because I'm helping my clients look at their manufacturing and what the results of that manufacturing is through the pre-fund QA work we do or the post-close QC work that we do. And it's interesting to me, I never see anything new that I haven't done or seen before in terms of the manufacturing output. It's always basically the same things. And you would think that at this point, we would have that kind of nailed down through technology, and yet we don't. I do think, though, that on underwriting engines and some of this technology that is cutting edge and so super interesting to research and be involved in is that The technology is not here to replace people. It's not here yet to make a decision. It's here to empower the employees and the people who are doing this work. We did a study. This is about 8 years ago. And at the time we did the study, we did basically a time-based study to see how long it took to perform, to process a loan. And at the time, the closing time was about 45 to 60 days. And it probably is not much different today. But the problem is that it only took 16 hours of fingers on keys to do the work. So much of it was the aggregation of information, the review of information, and the handoffs within the organization. And that to me could be so tightened up through technology. Now I'm talking like an operator, not a risk manager, but and it's hard because I'm both. But I do think that when you tighten up your operations, it just yields good risk management principles.
Well, I did want to ask you this because, you're coming from one background and utilizing that in this technology way. How does that still filter through, and how does that really benefit what you do now?
Oh, that's a great question. So throughout my career, I have had some unicorn experiences. So I, for 35 years, have been in operations, and I've been the lender, and I've actually been a business process outsource provider where I had 2,000 employees on 3 different continents, providing fulfillment services for some of the largest brands in the industry. I learned so much through that experience. So now I think when I look at what I do today is that I really have a 360 view of the entire industry. And that really helps me, I like to believe, be a better partner for my clients. And I'm constantly looking out because I've always wanted a partner like me, right? Somebody who was a lender, but a business process provider for me as well. And that is not just a vendor, but it's a partner who understands what it's like to sit in my seat, to sit before regulators, to sit before Amora. And now I'm in that position to do that for our clients. But it also keeps me with an operational headset of how to do what we do with better accuracy, better transparency, and better productivity through technology. And so I'm constantly looking out there and talking to people about what are the applications that do that for us. And I don't think you have to be the first to do any of this. But I certainly don't think you want to be the last. I think you should be, researching and knowing what is available to you and how does it make an impact on your business. I see a lot of people just buy a lot of shiny things, but it's hard to knit all those components together and still have a cost-effective manufacturing process. And often, if you're not using them right, it's really not even helping you on the risk management side.
That the shiny things, phenomena is such a hard thing because people, you can tell, how did they get those shiny things? They were trying to improve things. They were looking for a solution, and they trusted that this was going to be it. But sometimes it either doesn't work out or they don't really leverage it properly.
Well, I went back to grad school a couple of years ago. Actually, it's been like 8 years ago, just because I love the learning experience. And I did it in operations excellence. So everything that I do has a twist to operations. And whether you're in risk or any other discipline in our industry, it really always comes back to operations, how the work gets done, right? And so I am constantly looking at how do I make our people better. I think our industry puts a lot of burden on people. And instead of giving them a spoon, I'd like to be able to give them a backhoe to do the work, right? That's kind of how I've always looked at it, right? And I think a lot of people in the industry are still fearful of, wait, the technology is going to replace us. I don't think it's ever going to replace us. I don't think we're ever going to yield decisions to the technology, but it will make us getting to those decisions a lot easier and with a lot more accuracy and transparency by leveraging technology. So yes, I probably spend a lot of my personal time researching technology and talking to people who are in the technology space. And I consider myself absolutely a technology enthusiast because I'm trying to solve problems through the technology.
Well, and I think that's really a key there. Like we talked about earlier, it's like, it's not just the shiny objects. It's like, how does this really solve the underlying problem? You have to know what that problem is. For instance, it's not just the operational problem. It's not just the surface level. It could be much deeper than that. So, one of the questions I wanted to ask you is like, I think your background distinguishes what Mortgage Connect Risk Solutions really offers, but what are some other things that distinguish what you guys do?
Well, I think one of the things that I love about Mortgage Connect Risk Solutions is that our people are employees. They're not contractors. And when I was here, I was blown away that our average tenure for our underwriters is over 15 years. So
Wow.
With that legacy comes just this remarkable talent pool. I also think, having, not being a business outsource provider who's trying to be good at all things, and the fact that we're very narrowly focused on risk prevention for our clients and being experts in that is also a benefit. And our technology has been curated for over, almost 30 years. And we continue to work and refine our technology to provide greater benefit to our clients. And then, having somebody who's running this and from my seat, I get to help my clients like I wish somebody was helping me when I was running my business. And so that's the piece that I really love is consulting with clients and helping them see ways to run their business better through the insights and the data that we give to them.
I like that idea of like, what do I wish I had? When I was at a lender, what did I wish I could look to and then build that?
I think I have had so many unique opportunities, whether I was on the independent side or whether I was on the banking side, and they both gave me a lens into the difficulties. And sometimes it almost feels suffocating that you're trying to manufacture loans and you're trying to do it in the most amazing client-friendly way, but yet you have all of this burden on the back end that you're also trying to fulfill and to meet. And you're in the middle trying to manage both of those. And so I get that because I've been in the seat. I can't count how many more as I've had, thankfully, successfully, because I think I run a pretty good operations and risk management shop. And now I'm doing that at Mortgage Connect Risk Solutions. But I'm here to help my clients do that as well and share my experiences with them.
What are some of the wins for your clients you want to share?
Well, I think the fact, that we've been doing this for 40 years tells you we're pretty, our legacy is such that you can trust us, right? You can trust us. Agencies trust us. 300 clients trust us. But I think the things that I would really like to showcase for our clients is that we're not here just to show you where problems happen in a file. We're here to show you where the challenges are in your operations. And that's through just extraordinary business insights through our real-time reporting that our clients have access to immediately. Some of the other wins for even just choosing an outsourced provider in this space is it's super easy to decouple your post-close QC from manufacturing because it's actually after manufacturing. And you can convert your fixed cost into variable costs. And most importantly, put your highest paid, most knowledgeable employees on the front end, earning revenue for the organization versus on the back end where they're an expense.
Boy, that last one, that just hits home,
Well, I have almost always outsourced my QC. And the reason, there's a couple of reasons. One, when your teammates are doing the risk management internally for you, it's your teammates telling you your baby's ugly. That never feels good. And there's always a little inherent conflict when that happens, right? When it's an independent third party, I don't have an opinion on the people. I don't have an opinion on that. What I'm doing is just surfacing you the data that's non-biased and just here's where the trouble exists within your manufacturing.
So interesting. Kim, it has been a great conversation. Thank you so much for joining, sharing your insight. Great to catch up with you and also to find out what you're doing there. We will talk again soon. Thanks so much.
I look forward to it. Take care.